Good afternoon, viewers. Thank you for joining us. This is Sage reporting to you live from 𝐾𝐿 studio. It's lunchtime here in Sydney, and you know what that means. It's time for the mid-market pulse. So let us zoom our lens on the Australian share market performance. The Australian shares witnessed selling pressure on Wednesday, with the benchmark index ASX 200 retreating from yesterday's record high. The selling in blue chips miners, Rio Tinto and BHP, as well as tech and energy stocks, dragged the market lower. The news of the lockdown extension in Sydney also weighed on the market sentiment. The S&P ASX 200 was trading lower, 0.32% by the lunch. And early today, the index opened lower following a weak closing at Wall Street in the overnight trade. And moving on to the sectoral front, 6 of the 11 sectors were trading in the red zone, and information technology was the worst performer with a 0.9% loss, followed by energy, which tumbled 0.8%. Among others, telecom, financial, consumer discretionary and materials were also trading lower. Bucking the trend, however, A-REIT was the best performer with over 1% gains, and some of the other sectors that witnessed buying included utilities, industrials and consumer staples. On the COVID front, the state of New South Wales continued to report rises in the locally acquired COVID-19 cases. The case tally in the past 24 hours surged to 177 as compared to 172 infections reported on Tuesday. The death toll from the outbreak rose to 11 after a woman in her 90s died at Liverpool Hospital. The state government has announced a 4-week extension of the Greater Sydney lockdown, which will be applicable from midnight tonight. The curb will also apply to the Blue Mountains, Shell Harbour, the Central Coast and Wollongong. Let us turn our attention now to the biggest gainers and losers that captured the investors' attentions by the mid-market session. Investment fund 𝐴𝐵𝐸 Infrastructure Group was the top percentage gainer on the ASX, up 5% by the lunchtime. It will discuss the reason in our segment where we discuss the biggest gainers and losers that captured the investors' attention by the mid-market sessions as well. And some of the other notable gainers were the English bank Virgin Money UK plc, professional technical services provider ALS, automotive retail group Eagers and IT firm WiseTech Global. And on the flip side, miner Nickel Mines was the top loser on the ASX pack, falling 6.4%. And some of the worst performers were online bookmaker PointsBet Holdings, healthcare firm PolyNovo, gold miner St Barbara and mining explorer Orocobre. Now it's time to turn our attention to the biggest gainers and losers that captured the investor attention. Let us start with the shares of the previously mentioned investment fund 𝐴𝐵𝐸 Infrastructure Group, which gained as much as 5.8%. Reaching $2.75 Australian in the early trade on receiving revised takeover offer. The company said it had received 2 takeover proposals from Ontario Teachers Pension Plan Board and Kohlberg Kravis Roberts and Co. on behalf of its affiliated infrastructure investment funds. The bids included an initial offer of $2.63 Australian per security and a subsequent revised proposal of $2.73 Australian per security. The suitors have come back with a third takeover bid at a price of $2.95 Australian per security. Now let us take a look at the next company. The share price of iron ore mining giant BHP dropped by over 1%, down to $52.83 Australian by the lunch. The company has made a bid to acquire a high-grade nickel project in Canada, and the company's wholly owned subsidiary BHP Lonsdale has made an all-cash offer to acquire Noront Resources for 55 Canadian cents per share, and BHP Lonsdale has entered into a definitive support agreement with Noront through its subsidiary BHP Western Mining Resources International. And Noront Resources is a Canadian-based mining company listed on the Toronto Stock Exchange. It is focused on the development of its high-grade Eagle's Nest nickel, copper, platinum and palladium deposits and chromite deposits, including Blackbird, Black Thor and Big Daddy, all of which are located in the James Bay lowlands of Ontario. And now it's time for a quick break, but please stay tuned on 𝐾𝐿 TV.
Hi, This is Andy Liu broadcasting from 𝐊𝐶𝐞 Media Studio in Australia, and I'll be hosting the new 𝐊𝐶𝐞 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐶𝐞 TV and join me.
Welcome back, viewers. This is Sage reporting to you live from 𝐊𝐶𝐞 Studio. You're watching the Mid-Market Pulse. The share price of the global miner Rio Tinto was also down 1% at 131 Australian dollars after it committed funds for the 𝐲𝐻𝐻 lithium project, and the company has proposed 2.4 billion Australian dollars funding for the 𝐲𝐻𝐻 lithium borates project in Serbia, one of the world's largest greenfield lithium projects. The project remains subject to receiving all relevant approvals from concerned authorities, and 𝐲𝐻𝐻 will produce battery-grade lithium carbonate, a critical mineral used in large-scale batteries for electric vehicles. And this would position Rio Tinto as the largest source of lithium supply in Europe for at least the next 15 years. In addition, 𝐲𝐻𝐻 will produce borates, which are used in solar panels and wind turbines. Let's move on to the next. Shares of automotive retail group 𝐊𝐴GS jumped 5%, reaching $16.50 Australian on a robust trading update. The company expects to report underlying operating profit before tax of 218.6 million new Australian dollars for the 6 months ended 30th June 2021. And the net profit before tax from continuing operations for the first 6 months of 2021 is expected to be 267.4 million Australian dollars. The company said that its profit would be supported by the ongoing benefits of its material cost out program and the ongoing synergies resulting from the company's transformative merger with automotive retailer Automotive Holdings Group. As per the company, the new car market continues to rebound from the initial onset of COVID-19, with a 28.3% increase in the new car market compared to the first 6 months of 2020. Let us now take a look at the next company making the news today. The share price of a surface chemistry company, AnteoTech, rose over 2% on signing a UK distribution agreement for its product 𝐿𝐴𝐺𝐻𝐻. The company shared on this morning that it has signed a distribution agreement with Apicore for the distribution of the 𝐿𝐴𝐺𝐻𝐻 reader platform and COVID antigen rapid diagnostic test in the UK. And Apicore is based in Berkshire, England, and carries more than 25 years of experience in designing and manufacturing parasitological pre-analytical products, and is a supplier of rapid testing solutions. Let's take a look at the next share making the news. Pharmaceutical firm Acrux has updated that the US FDA has approved its generic version of 𝐸MLA cream. In June 2019, Acrux had submitted an abbreviated new drug application to gain approval from the Food and Drug Administration to market its generic version of 𝐸MLA cream. Now Acrux can manufacture and market the generic drug. And the product is used on normal intact skin for local analgesia, on superficial minor surgery, and as a pre-treatment for infiltration anaesthesia. And the Perth-based mineral exploration company also made the news today. Briar Resources announced on Wednesday that it has successfully completed the placement of shares and options to raise a total of 3.95 million Australian dollars. The company issued 39.33 million new shares under the tranche 1 of the placement, and as a result it raised 2.95 million Australian dollars using the company's 25% placement capacity. Also on our list today of newsmakers, Cash Rewards, the cashback reward program business, has provided its quarterly activities report for the June quarter. As per the company, business momentum continued as new members are up 208%. With this, the number of total members rose to 1.1 million, up 44%, which is above the financial year 2021 goal. And thanks for joining us on that report. That's all for now. Keep watching 𝐊𝐶𝐞 TV as we bring you the latest news and trending market updates live from Sydney.